numbers come through. In fact, let's bring in Dharmesh Kant, Head Equity Research at Chola Securities, to talk to us about just that. Dharmesh, some of these power sector plays and Siemens Energy in particular within that basket. Firstly, how do you view the numbers if you've had a chance to look at them? And otherwise, do you have a preference or a tilt in terms of what you like within that power pack?
Yeah, good morning, Nurse. Thanks for having me for the show. I mean, the numbers were actually a decent set of numbers. Even Hitachi numbers were very good. But I mean, as per market expectation, there were some flips out there. Normally, what happens, these are long gestation kind of a period, kind of a contract. And transmission and distribution, so particularly on the HVDC, is a very long gestation period. So the quarter in which the numbers comes through looks pretty good. But there will be some quarters would be lumpy and slow in nature. So but that's the nature of the business. Having said that, the only worry with this entire sector is the valuation multiples, where all of these transmission and distribution companies who are into high-end engineering and laying off transmission equipment is trading at. And there, the if you even stretch the extrapolate the numbers to FY30, seems to be fully discounted. So if you are a long-term investor and you buy the theory that there will be compounding of laying of distribution lines in the country, because the present grid is fully congested. So definitely power grid is raising his a capital expenditure of 30,000 crores in next couple of years, and then again they have a layout of additional 50,000 odd crores. So these orders will keep on flowing in. If you don't have a heat for valuation multiples, then both, I mean, Hitachi Energy as well as Siemens Energy looks a pretty attractive, fundamental good place, but from a long-term period. Don't look it on a quarter-on-quarter or a yearly basis.
Do you see, many of these companies are getting the order books coming in, but execution is getting delayed for many of these companies. Is that going to be a challenge for some of the capital goods of power sector companies?
Yeah, normally that's a big challenge out there because the Land Acquisition Act and the other environmental clearances have to be taken. Because if you are laying a transmission and distribution grid across, say, 500 kilometers or 200 kilometers, then all those clearances have to be put into place. And normally it takes a lot more time. So that we have seen. I mean, last year was such kind of a problem, not only faced by this. Conductor laying companies or the equipment making companies, but also the IPP, independent power producers like NTPC Green, had a long delay in execution of most of the projects. So that's a challenge definitely there. But government is pushing on with the reforms, and likely that these can be smoothened out. But once you are investing in these companies, you should be mindful of that. So the whole idea is look at the big picture. As long as that big picture is getting extended, I mean, you are safe. In between, volatility will definitely be there.
Kunal, any stocks within the power pack which interest you? And this could be all, right? This could be power financiers, it could be power ancillaries, it could be Gencos, it could be any of those.
See, only one of the stocks. So you look at the traditional power stocks, the likes of NTPC, Tata Power, etc. Nothing has happened on the charts. Frankly, in fact, NTPC is one of the stocks which have actually corrected 10% in the last 1 month, 1.5 odd month. But then when you look at the traditional power names, not much of a price activity over there. Even the power financiers, PFC, REC, etc., these stocks have gone through a correction. In fact, if I'm not wrong, these stocks are trading at a multi-quarter or a multi-year low for themselves, 365 and 370 thereabout for PFC, REC. So that's also an indication that we are looking at the trend being a lot more weaker. I think the only exception over here from the power names is TD Power, where I think the stock is trading at a multi-year high, crossed the levels of I think 800 to 850 some time back, and still trading quite strong on the short to medium term charts. So I think that's the only stock which has done reasonably well, if I'm not wrong. On a YTD basis also, the stock is up some 65-70% for itself, and that's too in a very consistent kind of a manner with a pattern of higher highs and higher lows. So that's the only stock which I think has done reasonably well. Most of the other stocks in the power stocks have either gone sideways or are still into a corrective wave.
Okay, on that note,
we were just talking about in the newsroom. What's the sense on that one like? Do you believe that regulatory overhang will continue on that one? Do you believe there's value in it? Which side of the fence do you sit on?
On the other side, Harsh, definitely. I think regulations will come into place where power coupling will be allowed, and there are more competition coming into the space. So this almost all sort of type of monopoly they enjoyed for a long period of years will not be there for them. So they have to share the entire whether it is day ahead market or term ahead market or short term market or the real time market. So tariffs will be more fungible and more negotiable across the exchanges. So to that extent, I think it's fairly valued at current price levels. So maybe 5-10% up and down based on the news flows can still happen. But structurally, I think more and more competition is setting in this space.
Dharmesh, what is the other sectors within the capital goods or companies within the capital goods that you see? Means if we saw ABB coming out in a mute quarter there, there are some other companies like Siemens and others who are also showing some kind of fatigue with respect to execution.
I mean, it was not a fatigue, but it was more of a disappointment when I looked at the numbers, because the expectation was with all these structural tailwinds coming into play, things should start looking up and should pick up from the private capex point of view. But that has taken a hold. Private capex has not taken. Only sectorally, there are few sectors like power we just discussed about where things are still happening. Because if you look at any IPPs, they are still commissioning on with the new capacity. So but there the space is moving up, but normal, electronics, electrification and industrial electrification, electronics segment, if you look there the still a slowdown is there. So maybe Q3 or Q4 is, even Q3, we are not hearing anything, very exciting from them. Whatever interactions we are having, it's more of a continuity of what is there at hand, not a growth there. So we'll give it a pass for this quarter. And in Q4, if things start looking up post budget, then I think it's a time to look into these stocks. For the time being, valuations, they have always been on the higher end of the curve. That also doesn't augur well for them. But business-wise, I mean, it's more of a lackluster in performance they have done, and no, management community suggests that things are likely to pick up in near future, and that's the worry.
Okay. Some of the other stocks which will likely be in focus are some of the defense counters. Paras Defense, they've signed an MOU for indigenous MRI magnet tech. HUDCO has signed an MOU with NIUA. Now, of course, not within the power space, not within the defense space, but HUDCO has signed an MOU. BEL is the other one. JV with Safran for Hammer air-to-ground weapon is what they've done. Another couple of order wins, Surya Roshni, they've bagged a 105 crore order for spiral pipes in Gujarat. And you also have something like a specialty restaurants where they've signed an agreement for a 2.03 acre land in West Bengal. All of those will likely remain in focus, and we'll obviously monitor those closely. But let's talk about some of the defense counters, Kunal. BEL, Paras Defense, any of these on your radar in terms of, I know you like BEL in particular, but we've seen a bit of a correction in defense. Even now, is this an opportunity to buy, or would you hold on?
Yeah, it's work in progress for correction for many of the defense names, because it seems like that the volumes have just started to increase higher for these stocks on the way down for many of the defense names. Look at HAL, the stock opened for the first time, I think, the last many weeks and months with a severe kind of a gap down, and the stock also traded or tested its 200-day moving average on the way downside. So that could probably be one of the litmus tests the stock would go through over the next couple of days. We'll try to figure out whether the stock holds on to that 4,400 mark which it tested yesterday. Even the likes of the other names, likes of shipbuilders, Reach shipbuilders, you look at Mascot Dog, etc. These stocks also went through a couple of days of a mild correction for themselves. So which means that we are looking at a point where it's more like the downward trend is still being figured out by short-term traders. The bottom is not yet made for the stocks. The moving averages have not been tested for these names over the short-term charts. That's why I would believe that maybe a residual correction could be at play for many of the defense counters. But yeah, I think out of the entire pack, BEL still stands out to be one of the strongest name, more formidable ones, and still more robust in terms of the chart patterns compared to many of the other peers.
Okay. Dharmesh, do you like defense counters at these valuations, or are you holding on?
No, sure. Definitely, we like all the defense counters. I mean, any declines are to be bought into, and if you are invested, stay invested because it's a structural long-term story in the making. So, if you go through 3 years or 4 years back, it was more of an Indian offset partner, most of the defense companies, and coupled with overall kind of company servicing kind of that. From there, it has shifted to make in India kind of a concept, and next 3 4 years with all these avenues coming into place, which you just spoke about, it will be almost 64% of the equipment would be OEMs will be made in India, and that is how most of these defense companies are progressing on. So a lot of value to be there. If you look at any company and if you look at book to bill ratio, it's almost 5 times order book is there, and it's swelling as we speak. So order flows are coming in thick and fast. I think quarter on quarter will again be a wrong concept to look at these companies. Like Kunal spoke about shipbuilding companies like Garden Reach or Majgaon Dock. So these are again a lumpy businesses. In one quarter, you will have good revenues coming in, and a couple of quarter would be a lean patch. So these corrections, trading corrections, are to be utilized, and we are looking at very aggressively on HAL and BEL, which Kunal's also topic is there. And HAL, I think the near-term target would be around 6,000 rupees per share based on FY27 estimate, and it's going to compound forward. So definitely a must in your portfolio. 10-15% allocation is what we have been recommending to our clients.
Mm. Could, Dharmesh, if you can also, give us an idea on the renewables. We spoke about the power sector, we spoke about capital goods. Renewables is something which has now gone quiet for some time. Some
Yeah.
worry, you have renewable operators like Adani Green and NTPC Green, all these companies.
So in renewable, you have to look at from two point of view. One is the IPP, independent power producers like NTPC Green, Adani Green, and all. And the other is the equipment manufacturers, that is the solar equipment, who are the manufacturers of that, like Wari, Vikram, Premier, and all. So, I mean, the equipment manufacturers are definitely, they have a very good order book for next 2 years. So they would be reporting very strong set of numbers. The problem is after that, the visibility gets, murkier as stronger and players come into play. Like Adani is coming out with a great facility, and then you have Reliance also pouring it into a large way. So there, what we have done initially, we played the theme out, and we are out of it. We have recommended booking profit. Wari was our pick from the IPO times since 1500. As far as power producers are concerned, I think NTPC Green still has a lot of value because by the time we end FY27, they will be having a stored capacity of 19 gigawatt, almost 7-8 gigawatts from by end of FY26, and already they are crossing 10 gigawatt as we speak. And this will translate into doubling of the profitability which is there. So as of now, with public sector undertakings, what happens is initially they have a lull period. I mean, the theme catches fire, then it flies off like a rocket. So that is what we are expecting. Lot of value out there as far as NTPC Green is concerned, and management is very aggressive. They are also already speaking about based on 2032, 60 gigawatt of installation of renewable power, and that will be there based on all the calculations and the government of India projections are there. So you have to be patient, stay invested. Nothing wrong with the company. Cash flows are intact. NTPC has already been equipped with the required capital, which will be infused into NTPC Green for the expansion plan. So I mean, things are progressing fine. Only patience is being tested for most of the investors. And I think if you're a holder for 2 years, 140, 145 should be the near-term target for NTPC Green.
Okay, Dharmesh, there's chatter about another rate cut which could potentially come through. Does that keep a lid with regard to how private banks and how private banks will likely move? Because you'll see another quarter where you might not see margins creeping up, if at all, coming off. In fact, so you might continue to see margin pressure. Is that at all a concern for you?
Yeah, Harsh, I mean, that's the reason why we are not seeing a very strong momentum play in most of the private sector banking space. However, public sector banking space did had a catch-up rally playing into out. So first quarter, it was transmission of rate cuts. Because of that, NIMs got, compressed. Second quarter, it was plateauing out of, NIMs, but the other income took a hit because of the treasury M2M marking being there. if this again a rate cut comes, definitely there will be a delay. But if you just skip the bottom line, that is the profitability, but if you look at the internals, the way things are progressing, they have actually picked up because if you look at Axis Bank numbers, the retail growth came at around 11%, SDFC, ICICI was 6 to 7%, and inquiries are picking up. So I think Q3 also they will be reporting double-digit kind of a retail loan growth. So this was up from 20% to 5-6%. Now again things are picking up. So market will give it a benefit of that. And eventually from Q4 onwards, I mean, there will be two rate cuts, not this one. I'm also expecting one more rate cut going forward. So that will definitely keep it a bit subdued on the pricing front. But again, the high margin of safety and when things settle down, so second half of, I mean, calendar year 26 would be great for these banks and people pre-position themselves. So I think that's already happening, but more aggression will come into as we commence, April, May next year. So till that time, you have to be patient for a solid price action to happen in both public and private sector banking space.
Uh, Kunal, any ideas within the banking pack to trade today? We saw plenty of volatility on the Nifty Bank yesterday. It came off those highs. Is this an opportunity at open today to buy the Nifty Bank or any of the specific private or PSU banks?
I'll go with maybe if I have to take a bet on the banks, and I'll probably go with Axis Bank or Kotak Bank. I think they are far more poised for a breakout or a turnaround as such. Axis Bank I think has been doing reasonably well, trading now at almost 1280, 1275 thereabouts. Kotak Bank is almost at 2100 mark. Of course, the news flow on the special situation for Kotak Bank could probably keep the stock into a little bit of a zing. But then I think that stock is also poised for a sort of a decent upside. But ICICI Bank has been an underperformer. The stock is trading below its 200 moving average. HDFC Bank, after that Thursday up move, has not seen any major follow through for itself. So struggling still at 1040 range, which has been a resistance point for HDFC Bank. So I think if I have to take a bet on the private sector banking names, and that to large cap stocks, Axis and Kotak could be the two names. But then the mid cap end of the private sector banking stocks is very vibrant. You look at Federal Bank, 250 plus. I think
52-week high.
52-week high. You look at AU Small Finance Bank, that's also done reasonably well. IDFC First Bank still holding on to that 80 mark. RBL Bank is also at much higher levels. I think 350 plus, 340 plus the last I had seen. So these stocks have done reasonably well and far better as compared to their larger cap peers.
What about IT?
I'll still go with Infosys as one of the stronger bets potentially. From the mid-cap end, Persistent, Coforge are the two names which are looking attractive at current juncture. So maintaining those old bets which we discussed last week also.
Right, and but today is a good day for IT because US has done relatively well. Yesterday, IT was finding favor, came off as a result of the MSCI moves that were playing out. Likely that was the reason. IT a good bet today?
See, I think look at this way, the real move for the IT stocks should actually start from the December series. Now, for the last 3-4 series, there was extreme negativity for the IT stocks. They are going into the end of November and the start of December series with a potential hope that maybe a turnaround could be there somewhere soon for many of these IT names. That's why the prices have started to rally. So that negativity for the IT stocks that extreme negativity is behind. So you'll start to see that happening in positions, less rollovers of short positions for these IT stocks, more confidence brewing for many of these IT names. These stocks coming back to their 200 moving averages, breakout individually, the sector performing very well. It will not be a candidate of shorting for the IT stocks, which was the case in the last, I think, 4-5 months consecutively, where every kind of a rally for these IT stocks was taken as a opportunity to create fresh shorts. Now traders are looking at dips to create fresh longs for the IT names. So that stance has changed for these IT names, and that I believe could probably result into a trend. Once we see the data of rollovers, for these IT stocks on the specific larger cap and the ones which have been doing reasonably well, I think there'll be more confidence that we are looking at the end of the correction wave of a major correction wave for these IT stocks and an emergence of a very positive cycle for these names.
Despite that,
Dharmesh, what is your fundamental take on IT? And, while on the charts, they definitely seem to be turning the corner. Do you think it's a good bottom-up play even from a fundamental basis?
Actually, I think our trade is definitely on. One has to give it a benefit of out here because I mean, most of the committees did suggest that now AI is moving into the application stage, and that is where Indian companies come into a big play because we are basically service enablers. So any company you look at in the IT space, rather than a product company, they are more of a application based oriented companies where they enable it. So with mass adoption of AI and products into the the market, the enablers will come into play. And there, I think definitely a trade merits our attention. One is that, and the second point, one which will play out in favor as a tailwind for most of the IT companies is the currency depreciation, which has happened, dramatically over last 12 weeks. So that will also translate into their profitability getting higher. So I mean, 10-15% kind of a markup can easily happen as we roll into the earnings season of Q3. But again, it will further the leg up, whether it is there or not there, how much the growth will come, whether it will be again a mid-single digit kind of a growth, or it will move to a double digit kind of a growth, is to be dependent on management commentaries and the outlook they give. To which I will keep, the comments reserved till the time they roll out. But in between, definitely our trade is on.
Okay, two other names from the Realty pack, which are going to be in focus. One, of course, look out for Suntec Realty. They're looking to enter Dubai's realty market now with an ultra luxury project, which is something in the offing. And the other one is Sobha Developers as well. They've announced the launch of their first project in Mumbai, named Sobha Inizio. We don't know what the value of it is or which area for that matter in Mumbai are they targeting.
I don't know, but what's interesting is that Mumbai used to be a very localized market.
Not
Now we
anymore.
are not anymore because now you have the DLFs, the Shobhas, the Prestige, Purvankara, all of them
All of
now
them.
entering Mumbai in a big way, and which used to be something like a barrier for other players to come into Mumbai market. Now it's no longer a barrier.
Arbitration resolution actually where Suntec is concerned of their Dubai property.
Yeah.
So they basically their Dubai development was stalled because of this arbitration. There's been a resolution now, as a result of which hopefully there is an unwind of that and maybe development can start. So that may be the key. So that was the news peg. Aisha. And realty therefore might find favor today because you've got these couple
Nifty
of
realty
positive.
is down 8.8% this month alone.
That's correct. That's correct.
Yeah. Dharmesh, anything that you're liking within realty? Some of these stocks are quite off from their highs.
Yeah, but I mean, if you look at the traction this year, I mean, even if you are going to buy a real estate property, it's beyond reach, the kind of pricing which is happening, and that's mostly in the ultra luxury space. Affordable is still to pick up, or mid segment is still to pick up, and that's the concern out there. Despite rate cuts, tax cut, everything playing out, still we are not seeing a great traction happening in those pockets. So, I mean, as a trade, one can still look at, and there I think Oberoi Realty or a Phoenix Mill, which is a blend of both, looks pretty attractive to us, and a DLF, a case in point. South based most of the real estate companies have done phenomenal job, but again they are languishing as of now. If you look at the price at that grade. So it's a mixed bag. You have to be very careful about what you are picking up. I think a better idea to play this entire real estate is through housing finance companies. And there I think PNB Housing Finance looks very much valued in, or LIC Housing Finance. So these two companies looks on a visual metrics quite comfortable. Because the next leg, if at all it is going to be there in the stock price section of realty, it has to be through affordable segment. And there I think housing finance companies benefit a better chance of greater alpha.
Okay. Kunal, do you realty as a pocket or you're avoiding at this point?
Avoiding as of now, but then there'll be a point where real estate stocks will become very attractive risk reward wise. I think they're down 8-9% so
Yes.
far. But then I think when you look at this in terms of sector performance, they are one of the worst performing sectors relatively as compared to many of the other sectors. And there will be a point where real estate stocks will be oversold. I'm not sure whether we've reached that point immediately, because most of the stocks, the constituents within the real estate pack, they are still going to a corrective wave. I think DLF is still at 710, 715 mark. The last I had seen, Prestige, Sobha, Godrej Properties, etc. They have gone through a mild correction the last few days. So not too much of a exaggerated correction into these stocks. That's why I would probably just wait and watch. But then yes, as I said, just like the IT stocks, maybe a couple of months back when the selling was at an extreme, these stocks were at a major divergence with respect to their key moving averages. There will be a point for real estate stocks where the trade would become attractive.
Okay, there'll be a point where the trade will become attractive. Are there levels you're waiting out for on the Nifty Realty, Kunal, that you can give us a hint of which could trigger that?
So on the realty index specifically, the level is closer to 840, 860 mark, which is the index levels as such. The low for the realty index in the month of August, September was around 855 or 865 levels. So we'll wait out for a point where there's at least a 2 to 5% correction further from those swing lows. That would be a first level which we look out for in terms of retest of the previous lows, and then the indicators bottoming out. Names constituent wise, I think, for example, DLF, if it comes back to say 680, 685 levels, that could be a good point where traders could get a contra buy.
Okay, that's the take coming on Nifty Realty. Dharmesh, on that note, we'll let you go. Thanks as always for your time and insights today. In fact, we're talking about Sunteck Realty.
so much.
So let's